Hello and welcome to the Primis Propositions Vodcast. Here, the Lion Roar. I'm Matt Brown, head of Proposition, and as always, she's waiting for my introduction. We're joined by Nikki Hemmings, Proposition Manager. Hiya, Nikki.
Hi, Matt. And again, I say this every time. Thank you for the lovely introduction, and welcome everybody again to our new episode of Hear the Lion Roar.
Indeed. I can't believe who we're about to introduce, Nikki. It's like a celebrity of Hear the Lion Roar, isn't it, this?
It is.
We've never had a hat trick where someone has wanted to come back for a third time, but this guy loves Hear the Lion Roar so much, he is here for his third appearance on the podcast today. So without further ado, hello, James Chutter, Corporate Account Manager from Leeds Building Society.
Hi, Matt. Hi, Nikki. Thanks very much for having me on. And thanks to the Primis Distribution for taking their valuable time out to watch this.
Indeed. So no pressure, mate, but the previous two times you joined us on the podcast, you did bring props. So we are keeping everything crossed that there will be some sort of prop during the podcast today. So James, for our viewers who haven't perhaps seen the previous two vodcasts or don't know much about you or who you are, do you want to just tell us a little bit about yourself?
So I'm a corporate account manager of Leeds Building Society, and I manage the relationship between Leeds and Primis, hence my attendance today. Previously, I was with NatWest for 15 years before that, as through a number of different roles, but as a BDM, which then led to me becoming a corporate account manager later on.
Perfect.
Fantastic, and welcome back. So, we'll go straight into the questions. You're a dab hand at these now, so let's just go straight into them. My first question to you then is, why has the increase in new build lending versus standard homes got bigger? You kind of mentioned off air that there's quite a jump last year to now, so tell us a little bit about that.
Yeah, so I've got a few screens that I can share with you, because it's a really sort of poignant question at the moment, in the fact that affordability is in the worst sort of situation it's been in. Houses are at their least affordable for 150 years. So I've got some stats that I just wanted to share with you a little bit. So can you see the slide okay?
Yes.
Yeah, perfect. So this shows a look at the UK housing over affordability over the last, 60, 70 years, going right the way back to, I think, 1951. And it compares the average house price versus the average salary. So you can see that, when this records first started, it's hard for you to actually see it, but it was only the average house price back in, I think it was 1951, was 1,600 quid with an average salary of 330. So that's just under, I think, sort of 4 times salary multiple. Whereas now, average house price is just below 300,000. And now the average salary is around 30 grand. So you're looking at 10 times salary to be able to, without any kind of deposits or anything like that, just looking at a straight up salary multiple of how much your salary is versus how much the value of the properties are. And it just means that it's such a big barrier at the moment for people who are looking to get on the housing ladder. And at Leeds Building Society, helping people get onto the housing ladder is our purpose of helping people buy their first homes. And so we've had we've been doing this for a few years, for those of you who might have watched the Vodcast before, but we've now changed our affordability assessment for when it comes to new build properties and more properties that are energy efficient. I'll just stop sharing that. Are you happy for me to run through that?
Yep, absolutely.
All good. Right, so I have brought props.
Yes, mate. You never let us down. Brilliant.
I do my best. So we've got 2 customers here who are looking to buy their first home, and they've got the option of basically 2 choices, where you've got a standard property which is rated EPC C or below, or you've got this, as you can see, hopefully, that it's green property with their green electric car outside with an EPC rated A to B. So this is a new build property, and at Leeds Building Society, we've assessed that the energy bills on this property is approximately 20% lower than what it would be in the standard built property. And therefore, it's going to have a saving for the customer when it comes to their utility bills. So I'll drop that down. So when it comes to us looking at this specific customer, I'll bring up my screen again quickly just to Sorry, Zoom's done that thing where I've lost my mouse now. There we go. There you go. So for these customers, they've got a joint income of £50,000, and they've got total applicant commitments of 250 for applicant 1 and 500 for applicant 2. And they're looking at a mortgage for over 25 years. So a loan amount of 165 with a property value of 220 and a loan to value of 75% with one dependent. So that's the sort of assessment that we're looking at the moment for this sort of, I suppose, case study. Any ideas how much it's going to get up to for these two properties for that case study? So for the older style property, I'll give you a starting off with, it gets you up to £146,728. So not a bad salary multiple, but any ideas what would happen? So when it comes back to doing the affordability assessment, if we go ahead and click that it's now going to be a new build property, any ideas what it was going to go up to?
Don't we have a guess first, Nikki?
Yes, you go for it.
I'll go 152.
152. Now, any advance on that, Nikki? Bear in mind that the property value that we're, or the loan amount that we were going for is 165. So it would be a pretty rubbish demonstration if it's less than that.
Let's go with 165, shall we, James?
165, 165. I've given you a nice clue. So it's actually £169,807, which is just under, or just over £23,000 worth of extra borrowing. So I'm going to get rid of that for now. It means now that it's actually improved compared to where we were last time I showed you this. I think the last time, or the first time when we launched this back in September, it was only a £10,000 increase. And it really depends on, you know, the type of customer, the type of property that they're buying, because, you know, if it's a single person who's buying a property on their own, then you'll find that there's less kind of difference between new build because the bills are going to be less. Whereas if you've got a family with, you know, a couple of children, then it will mean that there's going to be more people, well, more expected use of the utilities. Therefore, there's going to be more space for the savings. And so and we've also got our heads around the data a lot better. So it means that we've actually been able to increase the amount that we can lend to people based on the EPC rating of their new build homes. So just a quick refresh on that. So this is only available on new build properties. We don't have anything for remortgages yet, but it's something that we're closely looking at. All the broker has to do when it comes to putting in the information on the affordability calculator, they just tick that it is, that we'll ask what year it was built, whether it was post 2020 or pre 2020. As long as they tick the box to say it was post 2020, then it means that they can then get the extra lending as long as it's come through as a EPC rating of A or B. The broker doesn't have to do anything different. We'll go ahead and do the assessment and check the EPC rating, but other than that, it means that extra lending is going to be available to them and to their customers. So there you go.
Fantastic, and absolutely great to be able to see that visually as well. You know, it really gets it across. I can understand it. So, you know, absolutely great feature that you've got there. So what is the future for it? Do you think that affordability feature, the new build affordability feature, do you think it will be extended to other parts of your proposition in the future?
So that's one thing that we're currently working on, is trying to work out a way, because, you know, all lenders have got you know, like everyone in the UK, we've now got this target where we've got to be carbon neutral, and the government have set up some pretty high targets. And that's also been set towards lenders, that we need to get our back book to an average EPC rating of C by 2030. And so we're all kind of looking at ways that we can do that. And, you know, this way with our affordability is a great way of helping brokers and customers change their behaviour and see that there's a real benefit to using or to buying a more energy efficient home. But at the moment, I think we haven't done enough for the retrofit piece. And so helping customers to remortgage, borrow extra money, and to be able to then do the work that they need to make their home more carbon and energy efficient. That's the thing that we're looking at now. We're trying to find ways that we can help use this facility to allow customers to borrow more money but then prove the EPC rating improvements afterwards. So that's just some of the developments that we're looking at, and we're hoping that by the end of the year we'll come up with some other way where your brokers are able to use this. It is also, I think, while we're talking about green, it's really worthwhile if any brokers are looking at doing refinance mortgages for their customers to do green improvements. There's a fantastic amount of guidance on the Green Finance Institute's website. They've even done a broker pack, helping brokers with finding that little bit of information around what lenders are doing, and then different sources of information for helping customers, not in any way giving advice or, you know, you need to go to this company if you want to put solar panels on or anything like that, but just give some really good sort of central advice of where customers can go. So it's a great place for some direction.
Perfect, mate. Another thing that's quite topical, and I'm not sure we've talked about just yet, is Experian Boost. And, you know, can Experian Boost actually bring your score down? Can we just have a chat about that? Because I know we've chatted offline about that.
Of course, because that's something that I forgot to mention about our two customers, so that I was going to talk about. So thanks very much for the prompt on that. So that's something that Leeds Building Society are going to be implementing at some point in it will be by the end of May. So like what we showed on the first slide, we have noticed that, you know, especially with customers looking to borrow as much as they can, and especially trying to borrow at high loan to value, you know, we've got 95 mortgages back in the market. We've also at Leeds Building Society are big supporters of the 95% shared ownership market. It means that although those save the customers money in terms of the deposit amount, it's still a stretch in terms of their affordability, which means it's a bigger risk. And therefore, those customers, especially those trying to buy their first home, who might be in rented accommodation or potentially could be living with their mum and dad, they might not have that credit score that might be required to get them up to that 95% mortgage. And so we've seen that at Leeds Building Society, and so we've decided to take some action, and we've engaged with Experian, and we are hopefully going to be one of the first ever lenders to launch this in May, where the customer can use their Experian Boost feature. Now that uses open banking. So if your broker's customer is a bit worried about their credit score, the customer can go and either download the Experian app or go onto their website, register for an account. And I did this myself yesterday, funnily enough, in preparation for this call. It took me 5 minutes to do the registration. Once I got that done, I was then able to press the tab for Experian Boost. You give your permission and choose the different bank whichever bank you bank with. You then select the bank account that you want to give them access to. And Experian can then go in and look at your banking transactions and your history in that respect, and then it takes into account all your made payments. So things like council tax, mobile phone bills, you know, even Netflix or Spotify. It takes all those payments into account, and it can then help improve their credit rating. And the best bit about it, I would say, is that there's no fee. There's no fee that they've got to pay. They haven't got to sign up to any kind of subscription. And this doesn't mean there's no way that it can also bring their credit scoring down. So if we go and get this extra information on the customer, their credit scoring won't be affected in a negative way. It can only go up. And the average amount that we've been told by Experian, when customers do this, the average amount of increase that they will get is around 10 points on their credit scoring. So it gives them that opportunity to get that extra bit of boost. The main thing for the brokers to think about is that the customer needs to do this before they go ahead and apply, and that means before they go ahead and do the decision in principle. So if the customer is worried that their credit scoring might not be the best, then the customer can literally sit there on their phone and do it in front of the broker then and there, as long as they know obviously their information and the bank accounts that they've got. And then they can register, get the boost then and there, and then the broker can then go ahead and apply with us on using our mortgage hub system. So it just gives them that extra little bit of ability to get that better credit scoring.
Sounds really good, mate. Who would you say it's mainly aimed at?
As I say, I think it's to do more to do with those first-time buyers, especially those who might either be living at home who don't have not that they've done anything bad in terms of their credit scoring, but might just have a low credit score because they're not perhaps on the council tax or utility bills, or even someone who has been renting for a little while, but maybe just hasn't taken out that much credit in the past. It's just a way of them being able to try and boost their score and give them the best possible chance of being able to get their first home.
Excellent. So look, we've covered loads there. It's ace to have you back on the vodcast, particularly with props. You made us smile again, Mr. Chutter. How do people get in touch with Leeds Building Society should they have a query or want to know more about anything that you've spoken about today?
Yeah, so if you go onto our website, there's three main ways that you can get hold of us. If you go onto our website, then you immediately have our web chat service, which is hosted by our BDMs, our head office in Leeds. So you can get hold of one of them by using the web chat service. If you've got a more, tricky query, then you can call our head office number. Again, that's available on the website. If you go to the contact us part, then all these telephone numbers are there. At the contact us bit, there is also details where you can put in your postcode and it will tell you what your face-to-face BDM is. At Leeds Building Society, we've got, most brokers will have the option of either contacting a face-to-face BDM or contacting our direct telephone team at head office. So it's completely up to you. You can either contact us via the website, via web chat, via the telephone BDMs, or by your face-to-face BDM. And then if you've got, let's say, an existing case, which is a bit of a query, then you can contact our service desk, and the number again is on our website.
All bases covered, sounds like. So perfect. Thanks for coming on and telling us all about that, James. It sounds great. Loads of good stuff going on in Leeds. And if anybody wants to get in touch, use those mechanisms that James has just spoken about. So I think we'll cut it at that, mate. Thanks ever so much, and we'll see you soon.
Thank you, James.
Thanks for having me, James.
Cheers. Bye.